So welcome everyone to our learning series of 2026. I'll just share screen and get us kicked off for this session today. Can you confirm that you can see my screen okay? All right, I believe so. I can see it right there. I want to be sure you're seeing the screen I'm sharing. What can you see on the screen, please, anyone?
Yes, we can see HR
Okay, fine.
leverage.
Yeah, great. HR Pro Leverage. So welcome everyone to our maiden learning series for 2026, hosted by HR Pro Leverage. I'll quickly introduce you to HRPL. So HR Pro Leverage actually started in 2014, and we are a non-profit organization, and we're focused on providing learning platforms for professionals to leverage, pretty much HR professionals. We've gone beyond just having a platform for HR professionals. We've had platform for finance professionals, for medical practitioner professionals as well. Our aim is to have a real-time platform that people can use to ask questions, their real-life situations, and they can get real-time answers. Our vision is to be positioned as the foremost platform for intellectual and professional capacity development within the global HR and corporate space. Well, we've tried our best to live up to this standard. We've had our ups and downs. We've had our highs and lows as well, but we're still very committed to our mission to continually interact with professionals from all walks of life on HR platform. I mean, on HR knowledge and as well bridge the knowledge and opportunity gap that continues to evolve. The world is running so fast, and we're all trying to catch up with the changes that are happening in the world. Our mission is to help HR professionals as our priorities, and of course, every other professionals to catch up with these gaps that continue to arise as the world is evolving. So today, I'll just quickly highlight some of the things we've done since 2014. We've hosted several hangouts, several HR professional leverage academy, and we've had coaching and mentorship. And in the midst of all of that, we get to catch up, connect, and have fun. We've also given out over the years, several outreaches to widows, to people that couldn't afford certain opportunities. We've hosted job opportunity fairs as well, just several of them. And these are just highlights of catalogs of events in the past. All right. I'm sure you would find one or two people that you can identify right there in the catalog. Just to move us quickly, today's learning session is about the new tax regulations and how it affects the workforce. We've had a series of questions on several platforms, and people are really trying to figure out what this tax regulation is, what does it mean, and how do I ensure that I'm not caught in the web of the law itself. So as HR professionals, we do have a role to play, support our workforce, support the organization to make sure that we're not at risk, or the organization is not at risk of being fined. So today we have Oluwasegun Olateru Olagbegi, a seasoned chartered accountant and a management consultant to take us on this ride today. The session today is intended to help us understand. Of course, you've had several conversations. It's going to be as practical as we can make it, and we will entertain question and answer. So it's going to kind of run through the background and then share practical scenarios that you can see real life how it works, and you can ask questions thereafter. Just to let you know, we're recording the session and ensure that we do have your consent to continue to have this, to do this. We're streaming live as well on YouTube, and you can get a replay of this session. All right, so I'm going to quickly introduce Olateru Olagbegi Oluwasegun to you. He is a seasoned chartered accountant and a management consultant. He's got over 20 years of experience. He has led businesses to accomplish business growth expansions through several effective financial management and assessment advisories. He's skilled in leading multinationals finance team to accelerate business profitability. He's got specialty across development and implementation of financial strategies, budgeting and taxation. And he prepares and supervises financial statements and report, developing several financial models to support businesses. Currently, he consults as a CFO for groups of tech companies where he's leading the group's ERP and digital transformation project, and of course the finance team as well in fundraising activities, financial management, and of course he does have responsibilities over the years that he has handled, which comprises of organizing meetings for board of directors, regulating and the precisions of board reports, and consolidating strategic financial plans and financial report. He is a skilled negotiator, and he has been involved in several negotiations that has contributed to business growth and profitability. I see that he's been invited to several public speeches where he speaks to various of diverse topics on diverse forums, and he has been a presenter and facilitator at ICANN master classes and programs since 2012. Wow. And he has lectured ACCA students since 2006. That's 20 years. Excellent. So today we have the honor of being led and taught by FCA Oluwasegun Olateru. Over to you. Thank you so much for taking accepting our invite and speaking to us today.
Thank you very much. Let me say that I'll also be open to learn one or two things during the course of this conversation. Good evening, everyone. Good morning, good afternoon, depending on where in the world you are listening and watching from. Uh, Please let me know if you can, if and when you do see my screen. Uh, can anyone confirm that you can see my screen?
Yes.
All right, thank you very much for that confirmation. I find these new tax laws to have been one of the best communicated so far when you consider the various tax updates and modifications over the years. The apprehension that it creates, I hope that by the time we are done with this session, the apprehension will be a lot less. We will live with a better understanding. And I must also add that a lot of what is being trumpeted and emphasized actually has been part of the tax laws prior to now. So if anything is going to change, it will be maybe the use of technology, giving the taxman more powers. But a lot of what is being contested and considered controversial has always existed. What we'll try to see is to identify what the law allows us to legitimately do within the context that it provides in a way that we are able to continuously operate and carry out our professional and fiduciary duties in a manner that helps our business and the organization that we work with to thrive. So in this section, because of how enormous this law is, will just be focused specifically on the impact it has on HR and the payroll function. We're not likely to take a deep legal analysis of the pros and cons. We do realize that HR sits at the intersection of policy, payroll, and compliance and employee experience. And this is why this reform is relevant to us. So very quickly, we'll be taking a look at why the Nigerian tax system changed. We'll be taking a look at what the new tax framework looks like, its impact on the employee and payroll, HR compliance and governance implications, and how to navigate this, and then practical actions for HR leaders. And then I added a checklist for us to evaluate what we've done so far, and if there are any of the activities that we haven't undertaken, it would be a good time to just note them and begin to take plans to action them. So basically, this presentation is for technical, educational, and professional discussion purposes. We are not uh, having any plans to criticize it. We are not having any plans to champion it. We're simply going to look at its impact as it stands and what to do about it. As we are aware, the Federal Inland Revenue Service has transitioned from its previous nomenclature into the Nigerian Revenue Service, which aligns with the new tax framework. So why did the Nigerian tax system change? Historically, it's always been fragmented. You had overlaps here and there. It takes a lot working in accounting and, of course, for HR. Who was actually right? Some of this meant that you could interpret it in a way that suits you, or in a way that favors your practice at that time, which may not actually be the underlying spirit of the law. What this has done, however, is that it's helped to simplify and modernize them in such a way that complying it's a lot easier. I do recall years ago doing an analysis, and I observed that to comply with and I mean, this was also globally accepted, that to comply with the Nigerian tax system versus the American tax system was actually going to cost you a whole lot more. So uh, while the tax rate may actually be lower, by the time the cost of trying to comply with it, ending up, which you may end up paying maybe penalties or even interest for as a result of default, could mean you could end up actually paying a whole lot more. So why did it change? We've discussed that, and to reduce inconsistency. So, for example, you had the sales tax at the state level. You had the VAT at the federal level. And what that meant was, even if you're an individual, you still had to register with both the Federal Inland Revenue Service, even though your primary tax administrator was was the state government. So this new law tries to harmonize it and prevent those inconsistencies that has made doing business in Nigeria very difficult. And then, of course, there will be digitization is being leveraged to improve and efficiency and enforcement. What this means is that payroll and employee taxation are now under greater regulatory scrutiny. In time past, because of some of those gaps that existed in the previous law, you could push back um, when the taxman comes. But this law now empowers the taxman a lot more, makes it a lot clearer on what needs to be done. HR, like I said, is a critical compliance stakeholder, not just an administrative function. Overview of the new this new tax framework. We actually have 4 acts instead of the CIT, PAYE, PIT, capital gain tax, and so the plethora of taxes that we previously had. I don't know, can someone in the audience share with us what is the difference between PAYE and PIT? What's the difference? What's the difference between PAYE? What's the difference between PIT? Personal income tax. Anyone? We can drop it in the chat if we are unable to.
After a few minutes, it's time.
Yeah, go on. I thought someone was going to help us out with that. Anyone, difference between payee and PIT? Okay, I guess we'll just uh, continue. So the difference really is that the pay as you earn was just a component of personal income tax, and the PAYE related more to those earning employment income. As we will, I hope, as we would observe as we go on, personal income tax simply is much more than PAYE. It's not just your employment income; it's also those side businesses that you do. It's also the. Is someone talking? Okay. It's those dividends that you earn when you invest in shares on the Nigerian Stock Exchange. Is the interest you earn on the federal and state government bonds, as well as the one you also earn on your bank account. We will notice in the news recently, the fintech are just beginning to actually implement a law that has always been in existence. So what you should earn actually should be net of what is known as withholding tax, which is an advance payment of tax, and which though is not under this current is not under this particular conversation, is going to have an impact on what you and I are going to be doing in the next 1.5 month, 1 month and about 3 weeks thereabout. Because one of the requirements is that despite the fact previously, whatever HR files for each of us was adequate to as evidence of what we earn. However, the new tax law is emphasizing, it has always been there actually, but it's emphasizing now that each individual needs to actually come up under the personal income tax uh, to present what they actually make. So the new tax act is now contained in 4 acts: the Nigerian Tax Act, which, like I mentioned earlier, replaces PIT, CIT, CGT, capital gain tax, and value added tax, which was brought up, which was introduced in 1993 as a decree. You have the Nigerian Tax Administration Act, which is to help standardize the tax administration as well as the digital processes for some of us, depending on the size of our turnover and the nature of our businesses. We've been having to deal with e-invoices. And then you have the Nigeria Revenue Service Establishment Act, which replaces the Federal Inland Revenue Service Act. And then the Joint Revenue Board Establishment Act, which introduces the Office of the Ombudsman. And some of the clauses that I found in it was interesting because in it is saying that the ombudsman can actually take a tax authority to court if he believes that it is acting outside of the law. How that would actually play out in the next few months or years, we will wait to observe. The Nigerian Tax Act directly affects how employee income is defined and taxed. Like I mentioned earlier, taxable income is much more broader and is better clearly defined. The key changes that affected employees is that there's a broader definition of what constitutes taxable income. So our digital investments now come under are now going to be taxed. Benefit in kind used to be a gray area. It's going to be this new act has made it much more explicit on and how it's going to be taxed. Also, clearer valuation rules for employee benefits. For those of us who have post-employment benefits, there's a clearer valuation rules regarding how that should be carried out. And as we would have seen from January pay slips, it definitely impacts net pay one way or the other. I hope that by the time we are done with this session, we'll be able to review what we've done, and we'll be able to review that against what we've done and be able to update that if the need arises. For HR, potential changes to net pay and greater need for accurate benefit classification and payroll structuring. So what are some of the payroll consequences is that now pay needs to be more accurate because the taxman is going to be looking at uh, digital means to track income. These are some of the area. This is why actually we need to pay attention to the accuracy of the pay calculations. The reassessment of allowances, specs, and non-cash benefits. I found it interesting how, well, not just now, but how, if, for example, an employee's payment sits within basic housing transport, and if it sits outside that, the impact it has on the deductible allowances. All of this we need to pay attention to when we are defining the payroll component. It's an opportunity. It is an opportunity to try to reallocate it in a way that the employees can actually pay less taxes. And hopefully by the time we are done, we'll be able to answer employee questions a lot better. And I would also recommend that we take the conversation to staff, especially those at the shop floor, those working in the factory, so that they understand the impact of this. Have a session with them, get an expert, someone who understands this to help break down its impact to them so that it improves the employee experience for you. So what are those ways that HR is meant to comply and help run the business in relation to these taxes? One of those key things to notice that having a team now is mandatory. I'll double check that, but it seems that if the person doesn't have, there are steps that HR has to even take to help ensure that they get it. So even if you've had a previous tax number, you are encouraged to get this new TIN number that has been introduced. Under the Nigerian Tax Administration Act, there's a mandatory use of TINs. Digital filing is required, reporting and record keeping, which reminds me. So I saw a question about, oh, can everybody just enjoy the new rent relief? As it has always been, and more emphasized within the new tax act, there's the need to be able to provide documentary evidence. So for those of us who have staff in excess of 1,000, 2,000, 3,000, what this means is that we will need to get that document. It's going to mean a lot more work, but the truth is that I've actually been part of tax audits where we provided well over 9,000 documents to the taxman. Now, whether they now went through it or not, I am not privy to see what they did on their side, but what that meant was that it took tax liabilities from over 4 billion down to 3 million, so 300 million. So this is going to be very important in going forward on how we maintain records around employees and their allowances. Like I said, it's always been there. It's just more pronounced now, and people are reading these acts and the tax a lot more. Let me try to round up. So a stronger, more autonomous tax authority, increased likelihood of audits and enforcement due to the digitalization, faster processing, but lower tolerance for errors. Good news, though, is this. The good news is that as an employee, it's now been agreed that employees are actually paying a lot more taxes. When I say a lot more, not that than they should pay, but that they've actually been complying more than the rest of the taxable persons that the law actually recognizing. So, because you're an employee, typically your employer will act as an agent of government and deduct tax your pay on the income earned. For most, for the rest of the populace, it's not that straightforward. So that's the good news for um, those under employment. Let's round it up. Yeah, so I mentioned the Joint Revenue Board, which is to provide better coordination between federal and state tax authorities to reduce the previously subsisting risk of multiple and conflicting tax demands. Formal dispute resolution mechanism. I mentioned the ombudsman. So, what does this mean for us as HR personnel? There are clearer escalation channels for payee and employee tax disputes, and then stronger protections for employees and employers. Let me round up. So what are we to do? Some of us, I'm sure we've already done this, is to review our payroll systems and tax configurations, audit employee benefits and allowances, confirm employee TIN registration and accuracy. Lots more work, right? Update our HR and payroll policies. So let's remember to pick up our HR and payroll policies and update them to reflect this new act. And by the way, you are not behind if you haven't done so, but this is just a reminder to do so. Train HR and payroll teams on the new tax framework. I would recommend doing this for both HR and finance. There's a lot of assumptions made. The tax law is a tax law. It's law. That's why we have lawyers that interpret it, and you find different lawyers interpreting it from different sides of the divide. While this act has been made to be as explicit and understandable as possible, there's still that need to ensure that some of those clauses are interpreted. I spent a tremendous amount of time just interpreting clauses, and there are quite a lot of them in this new tax in the new tax law. So we need to keep training HR and the rest of the HR team and payroll team, and even finance on this new tax framework. And then prepare employee communications on frequently asked questions. I don't know if I put that in this slide. Some frequently asked questions, but we could something we can come up with together. Now, embed tax compliance into HR governance and risk management. Taxes can actually be viewed as a strategic tool if we view it from the right perspective. Yeah, so this is the checklist that I mentioned initially. You can take a screenshot now while we, yes, before I go into the practical session. I'll just wait for a minute or two and then okay.
So I put it in the chat in case someone needs it.
Oh, thank you. Okay, so that's fine then. So let's just go into the practical session very quickly. So what I tried to do was put side by side the old law, which was in existence up till 31st of December 2025, and the new law, which came into effect on the 1st of January 2026 for the Nigerian Tax Act and the Nigerian Administration Tax Act, while the other acts had actually been in effect since last year. That's how serious the authorities are taking this. So there's been this question about 800. There is only those earning 800K or not earning 800K that will be subjected to tax. The good news is that the tax table actually interprets that 800 as being the chargeable income, as being the taxable income. What this means is that an employee can actually earn a whole lot more than 800K and still not be subjected to tax. In fact, that means that an employee that earns over 800K may not need to pay tax. And this particular scenario is meant to emphasize that. I try to play with these components. I mentioned them: basic transport, housing, and it will be interesting to find out that how each of these components are how they are constituted can actually impact on your take home. So one of the strategies to consider is, like I mentioned, HR needs to look at that, and this may actually involve reissue. Anyways, let me not go into that aspect, but it's something we can sit down together to look at. So let's look at this person. This person is earning 1.312 million, basic pay, transport, housing, allowance, and leave. NHF, for those who decide, is about 2.5%. For those who are interested. For those who are interested, yeah. So for those who are interested, so NHF 2.5%, but it's not mandatory, right? So if it's there, we compute it, we add it. If it's not, we remove it. Statutory pension. What the law says, because I hear the interpretation differ, is that is to actually take 8% of total emolument. However, what this means is that if we decide to take 8% of total emoluments, which will cover all the payroll elements, including basic transport, housing, all the allowances. What this does is that at the end of the day, the company is going to pay a higher amount. So total emolument is actually going to be, sorry, the 10% rather that the employer is going to be paying is going to be higher than what it is now. So what the law says is a minimum of basic housing and transport, and that's that component that you are statutorily required to charge 8% of. Another area that I noticed we haven't been utilizing is the voluntary pension. The law actually allows us to deduct um, from the payroll while it is being processed. That voluntary pension that the employee paid and allows you as the pensioner or future pensioner can actually withdraw 50% of that in the course of the next 2 years. So it's legitimately allowed for you to deduct it. Then interest on mortgage loan. So for example, if you have a mortgage that you're paying for, the law allows you to deduct the interest from on that before you arrive at your chargeable income, or what we call a taxable income. I wrote this for my own personal consumption. There's something I'm still going to take up in the right quarters. I just realized something interesting there. But for now, assume that chargeable income is taxable income. What all of this does is that by the time you deduct all of this, including life premium on yourself or your spouse, okay? By the time you deduct all of that, in the old law, you were allowed, that was what was to be considered before you arrive at your taxable income or your chargeable income. I grade this out because this is under the old Tax Act. Let's freeze that. Let's freeze that. Where's this view? Okay, view freeze. That's done correctly. Okay, yeah. Okay. Under the consolidated rent relief, we were allowed to deduct 200,000 plus 20% off the earned income. In this case, I call it now the employment income. And the reason why I call it the employment income is that the new Tax Act now is more explicit on what is to be subjected to tax under the personal income tax. It's not just the employment income, it's also the income from your other businesses, like I mentioned. It's also your income from your chargeable gains as well. All of that comes under the personal income tax. Well, today we'll be focusing on pay. Now, if we notice, we will see that for this employee that is earning 1.312 million under the old law and the new law, what the pay will be is under the old law it was 78,800. Under the new law, it's 43,000. Okay, the assumption is that the actual rent paid is 700,000. That's the assumption. One of the things that the chairman of the fiscal policy has emphasized is that the objective of the rent relief is actually for the urban poor. And we all know how expensive rentals has been in our cities. And that's the relief is maxed out at 500,000. So you have the 20% of what the actual rent that was paid up to a maximum of 500,000. So what this means is that if you calculate 20%, so what this means is that if you calculate, if for example, the rent paid by the person is 15 million, the max on that is going to be just 500,000. Whereas if we look at 20%, 20% of 20% of that, that's about 3 million. But the law is saying regardless of what was paid, it should be capped at 500,000. For this scenario, the actual rent that another thing to note is that um, has different components change. For I'm trying to ensure that we all are able to come away with something at the end of this session. So for the person earning 1.3 million, they are actually going to be paying less under the new tax act. And so now this way I'm going to play with the 800,000. So if we notice under the new law, this scenario has the taxable or chargeable income at 1,087,000. So let's deduct about 200,000 from that, and then we see where that takes us. Okay. So here we'll find out that for the person earning 1 million naira, 1,012,000 naira, probably up to 1,050,000 naira, probably the new tax act actually expects that they should pay 0%, even though they are earning this much. Monthly, that's about 77,664. Under the old law, however, they would have been subjected to tax. All right, let's look at another scenario where someone is earning 21 million. For these scenarios, I've assumed that we are using 10% of basic housing and transport, and the person is also paying NHF. Like I said, this is not mandatory anymore. This is the impact of that. Again, I'm assuming the actual rent paid for this scenario is 700,000. Now we'll notice that under the we'll notice that under the excuse me, we'll notice that under the old tax law, the taxable income was 14.7 million. Under the new tax law, the chargeable income is 19 million. All right. However, what you'll find out is that the payee that both will be paying is just the difference between what they'll be paying is just 97,000 naira, with the person under the new tax laws paying 97,000. I played with some of these scenarios and I realized that I think up to some numbers close to 20 million, you'll still find out that you are still better off under the new law. In other words, you will still end up paying a reduced payee. For 10 million, what that looks like, again, under the new tax law, you are paying slightly higher than you are paying under the old tax law. That's for the 10 million. That's for the 10 million, the person earning 10 million naira per annum. That's about 771,000 monthly. Again, this scenario, forgive how it was done. Basic housing transport, you can play with it anyhow. Put some of it in transport, put some of it in housing. The outcome relatively remains the same. A lot of remains the same for this scenario. For this scenario we are considering. So what I observed was that the chargeable tax, the chargeable income under the old tax law was around 30 million, and under the 35 million thereabout, and under the new tax law, what becomes chargeable or taxable is 45 million. And this is what the taxes that will be paid. This is what that looks like. About 8 million under the old law and 9.2 under the new law, a difference of 1,085,000. But we must remember that this person is earning around 50 million. There are ways to push the components around to improve it, but I will not be covering that at the moment. So thank you very much for your time. I hope I was able to make it worth your while.
Thank you so much, and we really appreciate your support. I would have us take questions. If anyone has questions on here, we will take it. There's a question. I don't know if that's a question or a comment. The person said,
Good evening. I have a question. Let me ask a question.
all right.
Okay, my question is centered around insurance. So I want to find out if I do insurance for my wife and I, can I use both insurance to reduce my tax? I don't know if you get my question. Hello.
Yes, sir. I can get your question. Shegun, can you hear us? You're mute.
Yes. So under the new under the new law, yes, you can use the premium for either yourself or your spouse, but not both.
Sorry, I didn't get that.
You can use the premium, life premium, okay, for either
Yeah.
yourself or your spouse. Be- Because, and that was a good question you're asking, because the pervasive interpretation I'm getting is people are saying you can use both. You can use both in the sense that you can use either of, but you can't use
Okay.
both. Yes, you can't aggregate
Okay.
both. And yes, yes. So if, for example, you are not the one who
Okay,
has
please,
a
I have
life,
another question.
okay.
So now I'm meant to understand that the insurance payment is either um monthly, biannual, or annually. So my question is, if I decide to pay annual life insurance now, is that going to still apply for my tax relief in this year, or it has to span for a period of 1 year?
Yes, good question again. So what the law is saying is that it should be for the preceding year. So for employment income, that is usually subjected to tax on what we call actual year basis. So what the law is saying is that bring the receipts for the premium paid in the previous period, and then use that to net off uh, the taxes payable in the current year. So for 2026, typically HR should insist on collecting life premium paid in 2025 for uh, has been acceptable to be taxed, has been acceptable as an allowable deduction. Yes, before you arrive at your taxable income or chargeable income.
Well, I don't know if it's just me, but I didn't get the response to that question.
Okay, let me try to say the same thing in other words. We are now in February 2026.
Yes, sir.
So for February 2026, what HR would ask for is the uh, insurance. Sorry, is the life insurance premium paid in 2025, and then
Okay.
that is what will be used to deduct against the taxes for 2026.
Is it
Is
clear?
that uh, is that clearer?
Well, I still lost you at a point, but I don't know if
Okay,
the others
that must be the network. Okay, let me try to say it in another way. So, in, for anyone to enjoy um, insurance premium in 2026, they need to have paid for it in 2025.
Yes. Jonah, do you
So
understand?
whatever you pay, so whatever you pay in 2026, you would enjoy that.
it's difficult to hear the fluctuation in the network.
Okay.
So, because what I'm asking is, I have a lot of my employee who submitted their certificate for last year, even just from like June last year till date. So I don't know if they are qualified for the tax relief or until they pay up to a year.
Oh, okay, okay. That's your own question. Yes, as long
Yeah.
as they've paid for it in 2025, they can um, enjoy it in 2026. So what will happen again is that because employees are on actual year basis, your year of assessment is typically the 1st of January of that year to the 31st of December of that same year. That's what we mean when we say actual year of assessment. So whatever they've paid from June last or July last year all the way to December, yes, aggregate everything, find a way to prorate it over the next 12 months or as the case may be, and then and let them benefit from it in 2026.
All right, that's clear. Thank you very much.
All right, thank you.
However, I'm yet to get the answer to my last question because the network was not very clear as to if I decide to pay now for the annual premium, is it still possible for me to use that this year as tax relief?
Yes, so I said that will be enjoyed in 2027.
Network is really sweet.
Hello, Jonah. So whatever you pay this year, you'll be able
Yes,
to
sir.
use it in 2027.
Okay, okay.
Yeah.
That's clear now.
Yeah,
That's clear now. Thank you.
yeah, thank you.
So there is a comment in the chat session. It says the NHS voluntary contributions don't increase net salary. I believe a relief that doesn't improve my disposal income is not a relief. I do agree to that as well. But how can I see that it used to be it used to be compulsory and now it's voluntary? How does that affect the final outcome for the professional, the worker?
Yeah, so because the law says that if someone were to contribute to the national health insurance personally, um, then it's an allowable deduction. Like I tried to emphasize initially, this law is for personal income tax. What this means is that if for any reason you end up paying under the national health insurance scheme on your own, you can lay claim to that with as a as a deduction rather with your employer.
Does someone have a question?
I still have a question on this line, if I'm allowed to ask.
Go ahead.
Okay, so my question is, my company is paying my health insurance from myself, my wife, and my children, but it's not covering for my parents. Now, if I decide to do a separate health insurance for my parents, can I use that as a tax relief? Is it allowed?
No, that means you're a very good parent, a very good child of your parent, and we appreciate you for doing that.
Sorry, I'm not getting your response now.
No, you can't. You can't use it
Oh,
to deduct
oh,
your. You can't use it.
oh, all right, all right, that's clear. Thank you.
I think yes. So there's a question I did put in the chat. I'm struggling to read my chat right now. But the question is around how does this affect the diaspora employees? How does it influence? So, for example, if someone lives in Nigeria, works for a company abroad, or someone works abroad, sorry, lives abroad, but the company is based in Nigeria. Is there any dynamics of this new regulation that affects such people positively, as it were?
Okay. If someone lives in Nigeria and earns money from um, outside the country, um, certain factors begin to come into play. One of it is to evaluate whether the individual can be categorized as a non-resident. So what law says is that if you spend 182 days or less, you are considered as non-resident. So in that instance, there's some other requirements, and you don't have a principal place of abode in Nigeria and all that, then whatever you earn outside will not be subjected to tax. But the moment you stay 183 days locally, and you earn income from outside the shores of the country, you actually be subjected to tax. What the act is then saying is that if you've been subjected somewhat to some tax, let's see what that is, and then if there's double taxation treaty, you'll be given an exemption for that.
Okay. Okay. Thank you.
Okay.
That's
Yeah.
Now,
Yeah, this is Dave. I have my hand up. I want to ask a question. Can I go ahead?
yes, sir. Please.
yes, sir.
Okay. I was wondering how the tax equalization for expatriates seconded to work in Nigeria, earning their salary in their home country, how the tax equalization will be handled under this new tax regime.
Can you ask the question in another way? Same.
Okay. Okay. You know, when expatriates are seconded to Nigeria, then they pay their tax in their home country. They only collect some allowances here. And before, when you calculate the tax, what they are earning there and what they are supposed to, the tax they are supposed to pay in their own country and the tax they are supposed to pay here, if there is a difference, they will pay the difference here.
Okay. Like one of the things to note is that if they are earning their income here, yes, then you subject it to tax here in Nigeria. What they are earning here in Nigeria needs to be subjected to tax here in Nigeria as well. I hope that answer that helps.
Yeah.
Because
not quite, because they are not earning their income here. Let's take the IOCs. They second their staff to Nigeria to work in Nigeria, and they earn their salary over there. And because they live there, they pay some city tax, some state tax. And when they come here and work here, there's some tax they need to pay in the state where they are working because they are not resident in Nigeria.
So you answered the question, sir. That means they are non-resident, so they are not subjected to that. Thank you, sir.
Okay. Thank you.
So I think from what I'm getting is if you are resident in Nigeria for up to 183 days,
83 days and more.
they affect you. I know some companies will do the calculations and gross it up and take care of their expatriates, whether they're living here for less than 183 or more. I'm not sure, I'm not a pro, but from the HR standpoint, some comp and bend group will make sure that the company is not exposed and that the expats themselves are not exposed.
Yeah, that's what I'm trying to say about tax equalization. We call it tax equalization because the company has to gross it up so that they won't be having a double tax, because most of them work like they work up to 183 days here. Some of them rotating and out of Nigeria.
Yes, it should be the responsibility of HR and the comp and bend people for, I don't know how large the organizations are. If the organization is as large as companies that have their mobility department, they have comp and bend group, it is the responsibility of the company to ensure that the expat is not exposed, because sometimes they're not citizens. If there's any violation, it eventually connects with the organization. But of course, we have small and middle scale organizations that who cares? We don't really know all those specific details. But I think HR's responsibility will be to ensure that the employees are not evading the law, the tax law. Okay. Do we have any other hands up? I apologize, I missed the hand earlier on, sir. Is there any other question? Someone, okay, iPhone. Do you have a question? Cannot hear you. Can you chat? Talk to us. Please put it in the chat. We cannot hear you. Is there any other question today? All right, so in the absence of any question, we really want to say thank you to all of you for attending this session today. The learning series is intended to be a continuous series. We would you want to stop sharing, Shegun? To us. All right. Would you like to use the chat room if you have a question, iPhone? I really can't see your name, so it's hard for me to name you. All right. How will the tax authorities verify other income I earn outside my salary, even after pay has been paid by my employer? Solid question. Shegun, please go.
It's not going to be easy for the tax authorities to do that. However, it simply takes data mining. If I have all the bank accounts, I would mind to get how much you are earning because you have a BVN. So your BVN will tie a lot of your bank accounts together. Your BVN, I can trace you. Mine the data, use some data science tools. I'll be able to track you. Um, the question is not if it is possible. The question is when it will happen. So is it this year? Is it next year? There are actually tools that can do this, that can crunch your bank statement and summarize it. But the good news, like I said, is that for those in employment, typically taxes has been paid by the employer. So a bulk of it is expected that a bulk of what is earned has been paid. But if I were the tax man, yes, there are ways I would mine the data to get what I want, no matter the volume. It's about having the resources to mine the data. The big ways to get out of the it. Since you're asking me this question, I don't know if I should. Well, as long as long as you have bank accounts in Nigeria, and the another thing to notice is that a lot of the fintechs were outside the CBN. Were outside CBN's supervision. Over the last couple of years, from MoneyPoint to OPay, a lot of them have now been brought under that. So yes, don't let me appear to be ignorant. Yes, the financial inclusion rate is still significant. So people do convert money to dollars to take it out and all manner of things. But um, if it passes through through the regulated banking system, it's just about mining your data, and I'll get it out. I'll get how much you're making from all sources.
Fantastic. Thank you. Do we have any other question? So there was something you said earlier on during the presentation where you spoke about there's a way you can move the data around to enhance the disposable income. Is that a thing you can, is that something that will require a lot of time to show, or it's going to be something you can speak to?
Okay, let me just
Yeah, just to be sure, to be clear, it is not with the intent of tax evasion. It is to the intent of ensuring that the employee is getting an advantage from the new regulation.
okay. So
Is it going to take time? You are mute. We're not hearing you, Shegun. Have you been speaking?
Yes, I have actually.
Oh my Lord.
Okay. Okay. So again, this is where we need to be careful with how we what we map leave allowance to and how what our HR policies. If, for example, this is static and does not vary by basic housing and transport, it's just a static amount that needs to be paid. The moment I move this away from basic housing transport, the person is actually going to pay more.
Okay.
Yeah, the person is actually going to pay more because watch what happens to the statutory pension. It drops.
Yes, because
Let me do that again. Yeah, it went from 3.5 million. I know this is very drastic, but this will help us, will help emphasize what I'm trying to say. The moment it goes to another payroll component, which is not tied to basic housing transport, what the person is going to pay is going to be about 1 million more than they were paying previously.
wow. Okay. So
Yeah. So those are the considerations. So as you move things around, you also need to that was why I mentioned you need to look at your HR policy. If your HR policy has always been 10% of something, definitely when you begin to try to implement some of these things, it's going to impact the outcome of what you do. But if your policy already says leave allowance for grade X is this amount, so regardless of how these components change or move, then it's just what it is.
okay. Very, very clear. That really helps me. And I hope people understand what you've done
And there's still another one,
around.
benefit in kind.
Okay. Okay.
Yeah,
Now,
yeah. So should I say everything or you understand already?
I do understand, and I think
Okay.
we would have a follow-up series where we can go into certain details and we wouldn't be live. The second thing, there's a question here if it is possible that we have this spreadsheet.
The
Like,
spreadsheet. Okay.
okay, thank you so much. So
Yeah.
we would share that. And what we would do is share it to the membership just to avoid spamming people's emails. If you're a member, you would get that spreadsheet and we'll share it to on the I want to say family page on the group. All right. Thank you so much for that ask, sir. So yes, this is thanking you all for joining today. The session is live on YouTube. We will share the replay. And if you are not a member of HRPL, we introduced the organization at the beginning. We're a non-profit organization. We focus on providing a platform for HR professionals to leverage, developing their competencies and maximizing career growth opportunities. If you want to be a part of us, the link is in the chat there to join. And if you know someone that needs to be a part of us, you can share the same link to them. I'm sure you can copy that out there. So thank you so much. We would share with you the next series and please be on the lookout on the group. Thank you and have a great evening.
Thank
Thank you so
you.
much.
Thank you so much, Madam Coordinator. And thank you, Shego, for that beautiful presentation.
Yeah. Thank you.
Thank you.